Equity Bank has not directly been affected by the global financial crunch, simply because it's operating in a very conservative market that was not heavily interwoven within the global markets. The second one, Equity didn't have any holding on any of the toxic assets, so there was no direct implication. However, our shareholders have been affected in the sense that the capital markets in East Africa, basically in Nairobi, have been affected by a decline in value of transactions and consequently the prices. The country seems to be gradually getting affected by reduction in remittances from the diaspora. We're also seeing maybe challenges with exports, and the expectation is that if that turns into an economic recession, then naturally Equity, like any other organization operating within the country, would be affected not by the financial crisis, but the resultant economic challenges. The poor people in Kenya has been affected not necessarily by the global financial crisis, but principally by the food crisis. The food prices have been high. Before the food crisis, we had the fuel crisis, where prices of oil had significantly increased. But of late, we are seeing an impact from remittances. Poor people are supported by relatives working and living in the developed world, and we are seeing a decline in the amount and volume of remittance transactions coming into the country, and we guess that have consequences on the living standards of the poor people. Equity have responded to support customers who might be in distress. One, in the organizing loans that may become due, and for reasons emanating from the impact of the crisis are not updated. Of course, Equity is trying its very best in training and educating the customers on the impact of a financial crisis on their business models and their operations, so as one, to be aware, and secondly, to respond to the challenges that might arise from that. Looking at the global financial crisis, the equity business model that is driven by savings predominantly provides the poor with an opportunity to cushion themselves. It's a time like now that people appreciate the impact that savings that they have built have during unexpected challenges like now. And looking at, as a bank, we are supporting this whole initiative by training and educating our customers on the role and importance of savings, or savings for the rainy day, so as to deal with the unexpected. Savings has a direct impact of mitigating loss of streams of income, such that the families can continue to live on the same standards based on previous reserves. At the moment, we have 3.4 million depositors and 700,000 borrowers. And looking at those two figures, it shows a ratio of 1 to 5, as that very analyzed shows maybe the low-income population require a secure place for their savings as they require loans. So I am seeing microfinance institutions are likely to be informed to be able to provide a complete intermediation by taking savings and providing credit and shielding themselves from the challenges that has arisen from the current global financial crisis, where access to credit has become a huge challenge.